I want to share my thoughts on Palantir. More specifically, my hot take on Palantir stock, ticker symbol PLTR. Before we get into all the nitty-gritty details, before you light me up in the comments, yes, I fully understand that my take is going to be a little bit controversial, but first, please listen to all those stats, facts, and figures going into my reasoning before you want to yell at me on the interwebs. And then, hey, after you hear everything I have to say, if you still want to light me up in the comments, feel free to do so. But here's the TLDR of the video because I don't want to waste your time. I understand right now in the retail sector and mostly in mainstream media, everyone is yelling at you that Palantir is about to fall off a cliff and you better sell right now. Well, my opinion is the complete opposite. I actually think between now, the point that I'm filming this video, and the end of the year, I think Palantir, ticker symbol PLTR, is about to rip to new all-time highs. Before we get into all my thoughts and reasoning for the Palantir stock price prediction, let me add a little bit of context and framework to this particular video. I'm filming it on September 9th. The market just closed. Stocks closed at record highs despite job worries, looming inflation reports. So the overall market, the S&P 500, didn't hit a record high, but it hit a record high closing value just above 6,500. The Nasdaq, not too far away, actually looking really good, holding this breakout, and once again within spitting distance of an all-time high. And then obviously with respect to Palantir, it's lagging behind a little bit. The all-time high is a little bit closer to 190, currently trading at 162, 163-ish. And right now, the year-to-date returns are an eye-watering 112%. I fully understand when you have numbers like that, there's going to be a lot of people with kind of the old adage of, hey,
take some of the money off the table. It's gained a lot. What about mean reversion?
I completely understand, but I think when you really look at what's going on with mainstream media and even a little bit of the retail sector, there's a lot of negative Nancy's out there. Palantir stock falls for 6 straight days and longest losing streak since April of 2024. Palantir wipes out billions in market value amid sell-off. Palantir stock drops as the legendary short seller called it absurd. PLTR stock prediction. Will Palantir technology stock keep going down? Palantir red flags in the recent stock performance. Opinion. Here are 7 reasons Palantir stock can plunge at least 60%. Mainstream media will do anything against retail, but even when it comes to retail, this is just one example of many. We're even seeing individual accounts. This one's literally called Short Palantir. And just to be clear here, I don't know if this is a real account or paper trading, but apparently they have $1 million bet against Palantir. So if I were to summarize everything that lamestream media is currently saying about Palantir, it goes something a little bit like this. It's gone too high, too fast. It's trading at way too high of a PE ratio, a price to earnings ratio. And hey, if you want to subscribe to that form of trading or investing, don't let me stop you. I'm just another talking head on the internet. But also, let's get into some of the other details, maybe something for you to consider. Number one, trading and investing are two different things. When it comes to the world of investing, it's more of a fundamental call out of where you think something is going in 5, 10, 20, 30 years. As a trader, it's a completely different game. You're actively attempting to get in at lows, sell at highs, bring it back down to lows, then go to highs again. It's much more of an active game in reality. And what I don't like about it is because it's played on quote unquote the same field, just to keep going with this metaphor, people think trading and investing are similar. They think that they're related. And in reality, anyone who's actually in Wall Street would tell you that investing and trading, active trading, whether day trading, scalp trading, or even swing trading, are two wildly different things. I should also let you know, for the point of transparency, that I am a Palantir investor. For the long term, I think this thing is just going to keep going and going and going because I like the direction, the fundamental direction of the company. So yes, I have stock and that's going to be there for, like I said, multiple years. But recently I saw an interesting trading situation, which actually prompted me to get into some shorter term long calls on PLTR. And for the remainder of this video, that's really what I want to talk about. I want to talk about my controversial call out for Palantir for the remainder of this year to rip, and potentially, and really I would argue that statistically, it's more likely than not that we see new all-time highs. So coming back to the overall market, one of the reasons why people think this isn't going to happen is because of seasonality. So even though we're at a new all-time high here on the S&P 500, very close to it on the Nasdaq, people point out the seasonality of September being the worst month ever. They point out the seasonality on both the SPY and the Qs being the worst month ever. And it is the weakest month, but I also want to point out October and then especially November is very strong. And I also want to remind you with Palantir, Okay, maybe it does have that seasonality, maybe it doesn't. I find that a lot of people assume it goes with the market, but when you actually crunch the data, when you actually look at the stats, facts, and figures, you get a different story. September is actually bullish, October is actually bullish, and then November is absurdly bullish. So just literally over the past 5 years, and you could also even see this over the past 3 years, this is very strong into basically turkey time. I'm talking about Thanksgiving. So that's number one. Seasonality, Palantir does buck the trend, and really for the next 3 months in a row, the bulls do dominate. The other three things I like to consider are price structure, price momentum, and options flow. So when I look at those three plus seasonality, this is the way where I can make more of empirical driven decisions rather than just gut feel of what's going on. So we already know that seasonality, the historic numbers, and I get it, the market doesn't repeat, but it does often rhyme. Okay, that's already good. That favors the bulls. So let's dive into the other three. Number one, price structure. Overall, do we have higher highs and higher lows? Higher highs and higher lows, in my opinion, is the best way to define a bull trend. Obviously, we've been ripping, we pulled back, we started to push again. I'm seeing a nice succession of higher lows, and really, I want this to pump and make a new fresh high. But as of now, especially if you look on the weekly, by definition, who would not consider this to be bullish price structure? The next thing we have to consider is momentum. Okay, momentum, that's an easy thing. There's many ways to measure it. Probably one of the most popular ones is EMA. Looking at the daily, looking at the weekly. Okay, awesome. Both are above all major EMAs. Anywhere from the 10 to the 50, price is above both. So we have bullish seasonality, bullish price structure, bullish momentum. The final thing we have to look at is the options setup. So just for the point of this, you should know, as obviously PLTR, Palantir currently trading at 162-ish, we are above a huge gamma support. Looking at the current gamma structure, remember the situation is dynamic. It can change as early as tomorrow, or it might stay exactly like this. But as of the point that I'm filming this, the fact that we are 162 means we are on the right side of this gamma structure. We have a ton of support right here. The first natural obvious target would be 165. And then from there, I'm looking all the way up to 180. Once again, situation is dynamic and it can easily change. Another tool I have to share with all of you is what in the world is going on a couple weeks out. You can see right here, the yellow box are the amount of calls, the blue box are the amount of puts. Pretty much every weekly and even monthly expiration is dominated by calls. There are more calls in plays than puts. Okay, makes me feel pretty good. And then I look at where they're playing and I start to get, once again, my eye is really getting drawn to this 180 level, whether it's for this week at 165 up to 175, next week 175, 180. I'm seeing all of these nodes spike up just below the all-time high, telling me that there's a little bit of optimism. So just because seasonality, price structure, price momentum, and options flow all are leaning in the bullish direction, does that mean that this is a guaranteed play? Absolutely not. Anyone who's telling you that anything in the markets is ever guaranteed, they're probably trying to sell you something and it's probably not worth it. In fact, it's most likely snake oil, which brings me to the final point of this particular trade. Remember, we're talking about an active trade, not an investment. I'm already in this for the long haul for investing. For the trade, the final thing I like to consider is risk to reward. Well, based on today's technical breakout and everything else, it looks like we have very well-defined risk. You could use today's breakout bar, you could use the recent low, so we're talking 156, we're talking 147, we are talking 142. And then the reward is basically all push all the way up to 180 to 190. That's at minimum a 2-to-1 risk reward, as in 2 reward to 1 risk. So in reality, for these types of setups, you only have to be right 1 in 3 times to be break even, and anything better than that, you're going to be net profitable. And that's just if you ride it up to the current high, no less the key technical and psychological level of 200, where the risk to reward ratio would improve further in your favor as a trader. So it's one of these things where if you're wrong, it's kind of a paper cut, but if you're right, the return is huge. And if you approach the market with this type of style, this type of mantra time and time again, as I said before, you don't have to be right that often to be at minimum break even. So overall, I get it. I get that right now the retail community on top of mainstream media are basically saying Palantir is going to crash. It's gone too far, too fast, and everyone keeps citing the PE ratio. Maybe they're right, maybe they're wrong, maybe this isn't the perfect time for an investment. But as an active trade, when I look at seasonality, when I look at price structure, when I look at price momentum, and when I look at options flow, and then I consider all those together with the current risk reward setup, hey, it's good enough for me to put my money on the line. So maybe you agree with that, maybe you don't, but just playing the game of math, I really like PLTR's statistical opportunity for going to the upside. And if I'm wrong, hopefully I'm only suffering a paper cut. Obviously, these are my own thoughts and opinions, and I know some of you are going to agree with it, some of you might not. So I'd love to hear from you in a comment below. And hey, maybe we could just figure out this puzzle of the market together. That's what I have for you today. I'll catch you in the next one. And of course, if you want me to do a review of your favorite stock, let me know in a comment below. And if I see that there's a lot of people kind of calling out the same ticker, more than happy to do a breakdown. That's what I have for you today. I appreciate the good vibes. I'll catch you in the next one.